American Biotics.
Barb, our stock guru. She thinks American Biotics may be a good investment. It's supposed to be close to a side effect-free anti-impotence drug.
You guys play the stock market?
Oh, we don't just play. We win.
Hi, welcome back. In this video, we will go through a step-by-step method to find out whether your crypto is overvalued or undervalued. This method involves what is called a valuation framework. This framework has been worked on by a bunch of very smart people. It is even used by investment professionals. It involves calculations which won't take more than 20 minutes, and you can use it to inform your crypto investments. We will also go through two other methods, which are slightly faster to do if you don't have the time. So, join us in this video to find out whether your crypto is overvalued or undervalued. We'll first go through an introduction on valuation frameworks, and then the first calculation, which is an equation of exchange-based framework. We will then go through an alternative calculation. This is based on Metcalfe's law. And finally, we will look at a method which doesn't involve any calculations. By the way, these are only meant to be used as a general rule of thumb. Do not use this to solely inform your investing decisions. It is based on a lot of assumptions, and we have tried to make these calculations as simple as possible. So please use this as a rule of thumb only. And standard disclaimer, this is not financial advice. The content of this video is for educational purposes only. Estimating fair value for crypto has been an ongoing process ever since the crypto market started. Unlike traditional stocks, where the market is well known and there are well-known frameworks such as discounted cash flow, there isn't a tried and true framework for crypto yet. There are currently a lot of smart people working on this, and developing such a battle-tested framework would be the holy grail of fundamental analysis in crypto. It would be a Nobel Prize winning event. If you don't know why you would need such a framework for calculating fair value, imagine this. Let's say you have $1 million to invest and you want to make sure you're not going to make a loss. Let's say you see a crypto and you like the look of it. At first glance, the price of the crypto is $100. The price has been rising recently and it seems like a good investment. But before you invest, you try to estimate its fair value, and you find out that it is actually only worth $50. So now you're better informed to make your investing decision, and you might not decide to invest your $1 million here. Now let's say that you find out that its fair value is actually $200. You now might decide to invest some of your $1 million here, depending on how confident you are, as you potentially stand to double your money. This is why finding fair value and using such a framework is so important. In traditional finance, this is called intrinsic value. It helps protect your investments, and it also benefits society in general. It helps society place capital towards cryptos that make more efficient use of limited resources. It's good for the economy in general. So, currently there are two different types of valuation frameworks which have risen to the top in the community. First is an equation of exchange-based framework, and the second is a framework based on Metcalfe's law. Both are used in the real world by investment professionals as indicators. Both have also been developed by a wide range of very smart people, such as Susan Athey, who is a Stanford professor of economics, and Thomas Lee, who is the head of research at Fundstrat, an investment research house. Now, we would love a single, sexy, and simple framework to use, but both have their advantages and disadvantages. Today, we won't be focusing on Metcalfe's law. We will go through the specifics of why later on in the video. So today, we will be looking at the equation of exchange-based framework. By the way, we've shared this calculator on an Excel Google sheet in the description below. Feel free to download and play around with it offline. and let us know how it goes. We will work with Ethereum as an example in this video. So, let's get started. Step number 1. Pick a coin you want to calculate fair value for. Next, we need the date of when the crypto was first invented. So, go to Google and search for when was Ethereum invented. Look for the year that it was invented and make a note of it. Now take that year and put it into the calculator. This will give us the time in years until maturity. This was found by taking the invention date of Ethereum, which is 2013, and adding 15 years. We use 15 years as new inventions take generally 10 to 20 years to become mass adopted. The calculator does this for you automatically, so you don't need to do anything here. This gives us a date of 2028 until Ethereum is mass adopted. The date right now is 2021, so we have another 7 years until maturity. Next, go to app.santiment.net/charts. This is a blockchain data aggregating website. So on this website, select your crypto and look for daily transaction volume in dollars. It is usually under on-chain on the left dashboard. Select on-chain and look for network activity. By the way, if the data is not available on SanBase, then you will need to find it elsewhere. We will go through this after the steps. However, SanBase seems to have the most comprehensive database so far. So, under on-chain and then network activity, you'll be able to find daily transaction volume. Select daily transaction volume in dollars and put it on a chart. Then on the chart, make sure that the data shown is a 30-day moving average. We use a 30-day moving average as it clears out the cluttered daily movement. It's just an average of the movements over the last 30 days. Once you have the updated chart, open the chart and mouse over the latest reading. Just read the most latest reading and make a note of it. Then take that reading and put it into the calculator. Next, we need to turn this into future daily transaction volume. To do this, we need to extrapolate the current value into the future using a compound annual growth rate. This spreadsheet has a compound annual growth rate calculator built in, but if you want to do it yourself, you can find one on Google. So, let's use a compound annual growth rate of 7.5%. Why 7.5%? Well, annualized compound growth rate of Amazon sales in 2019 is roughly 17%, and for Walmart, it is 1.5%. To give you some perspective, we expect that mass adoption of blockchain will occur without the public being aware that they're using blockchain, much like how people use the internet but don't know or don't care they're using TCP/IP. So we take 7.5% as a conservative estimate. Now we get the value of future daily transaction volume. Great job so far, by the way. Now let's move on to velocity. Velocity is how many times does the underlying asset exchange hands. So for example, how many times does one Ethereum move from one user to another user? This can be found on SanBase as well. And remember, all values need to be daily and 30-day moving averages. For velocity, we don't need to do anything special. You just simply put it into the calculator. The only thing to note is that if you can't find velocity on SanBase, you'll need to find it elsewhere. We will cover this later on in the video. Next is store of value demand. Store of value demand is based on the assumption that crypto will compete with gold as a long-term store of value. Historically, gold constitutes between 2 to 5% of the world's total investable assets. Currently, this stands at roughly 2.4%. The total investable assets today is roughly $450 trillion. So, 2.4% is $11 trillion. If crypto does manage to capture some of gold's market share, let's say that it will capture 2% out of the total $450 trillion. This is $9 trillion. It is believed that only 2 to 5 very dominant cryptos will form the majority of that 9 trillion. Continuing with using Ethereum as an example, we will speculate on how much of that 9 trillion will be Ethereum. If Ethereum manages to solve its scalability issues and continues to innovate faster than its competitors, then it is likely that Ethereum will continue to be a top 5 crypto. Something you need to be aware of is that Ethereum has been saying they will upgrade to Ethereum 2.0 since 2017, and it has still not happened. So, the concern here is that other projects who are already scalable will outpace Ethereum in innovation, as Ethereum will still be working on scalability. Considering that Ethereum faces a lot of competition, we will give a 20% probability of remaining a top crypto. However, if that 20% happens, Ethereum will likely be a large portion of the total 9 trillion. So, we will give it a 40% share here. This gives us a $720 billion store of value demand. This part takes some speculation, and it is worth learning more about the market to inform your decision here. However, if you don't have the time, we've added some rough numbers in the calculator that you can use. These are based on basic standard deviation percentages. You should have an idea of the chances of your crypto being in the top 5 already. So pick a chance and put the corresponding value into the calculator. Next, we need the total supply of coins. You can find this on any price tracking website. For this, we need the total supply. So not the current supply, but the total amount of coins that will ever be in existence. Ethereum in this case does not have a predetermined fixed supply, so we will use the current supply. Now we have all the data we need. We finally need to choose a discount rate. Since the time to maturity is 7 years for Ethereum, we need to apply a sufficient discount for holding onto Ethereum for 7 years. We've prepared 2 discount rates for you to use. Use 4% if you think the crypto has unsystematic risk. So for example, Bitcoin is considered unsystematic as past performance shows that Bitcoin is uncorrelated to everyday stock market changes. Use 8.5% if you think the crypto has systematic risk. So for example, if the stock market or economy goes down, the crypto will also go down. For Ethereum here, we used 8.5% as we believe that Ethereum will be a part of the future economy, given its real-world usage in finance applications. Please note that these percentages do not take into account any black swan events. We make this point because Bitcoin, even though historically uncorrelated to stock market changes, showed correlation during the recent Cerveza 19 market crash. Now, we have all the necessary parts to use the framework. We see that a value pops out at the end, and that's it for all the steps. But if you want, an additional step is to compare the fair value with the current price. At the time of making this video, we get a value of $3,567 per Ethereum. So, this is how the calculation works. All of it is taken from Susan Athey's and Robert Mitchnick's paper. Feel free to look through the paper yourself if you want to do a sense check on this calculator. And just want to stress here again that this is a very rough calculation. It is a simplified version of the original research paper version. Things like daily transaction volume should actually be the real transaction volume of the underlying market and not the transaction volumes found on exchanges. So for example, in the research paper, they say that daily transaction volume for XRP is estimated to be $556 billion. This is based on global remittances and foreign exchange trading. So to use the original version of the calculation, you need to be familiar with the volumes of the underlying market. This simplified version also only takes into account transactions occurring on-chain. It doesn't take into account volumes generated off-chain and smart contract applications. Now you may have some differing opinions on how we did this calculation, so please feel free to let us know so we can improve on this collectively. Now, if you couldn't find the data on SanBase for your crypto, you will need to find it elsewhere. A good place to start is to Google for your crypto. Good search terms to use are your crypto space metrics. Also, things like velocity might be very difficult to find. We've added some pre-made values in the calculator for you to use. And to give you some perspective, the velocity of the US dollar is 1.12. This is considered the lowest it's ever been since the 60s. The highest it's ever been is 2.19 during 1997. When velocity is low, then people are not spending and are hoarding their money. If velocity is high, then demand for money is low and people are spending. So if you think that people are hoarding the crypto and it's not really being spent, then pick a low velocity of, let's say, 0.75. And if you think your crypto is being spent a lot, then pick a higher velocity of, let's say, 3. Here are also some pre-calculated analysis of the following cryptos. Now, let's move on to Metcalfe's law. Now, we know that correlation is not causation, but in research studies, it has been shown that Bitcoin's price changes are 94% correlated with Metcalfe's law. 94% correlation would be considered witchcraft in statistics, so we had to explore this further. One thing we found was that there was a lot of research on this and found different variations of Metcalfe's law. The main reason for these variations is that Metcalfe's law is said to highly overestimate the value of network effects. So, variations were developed and compared to estimate value more accurately. Odlyzko's law is one of these variations, which he found to be the most conservative variation. We took the liberty of comparing these for you with various methods found over the internet, such as daily active users squared times average transaction volume, and as well as daily active users squared divided by total circulation. What we found was that Metcalfe's law-based methods definitely do overestimate valuations. The values are either extremely high or just unconvincing. We came to the conclusion that these methods might not work when trying to calculate fair value. They seem to have a very wide range of results. This is why we focused on the medium of exchange-based framework earlier in this video. By the way, if you'd like to try this yourself, the data you need to find is daily active users and average transaction value. You can find these on SanBase or Google. Metcalfe's law-based frameworks have a high correlation, but only when used to describe the price changes, not the actual price itself. To track these price changes, you need to be more comfortable with setting up graphs and playing around with data. This isn't something you can do on the back of a piece of paper. Another thing to keep in mind for Metcalfe's law is that Robert Metcalfe created the law to sell more Ethernet connections for his company. So it is not an actual physical law tested extensively by research. The big assumption in Metcalfe's law is that every user brings equal value to the network, but this isn't true in reality. Remember, this law was based on selling Ethernet cables, where each Ethernet cable connection is capable of equal information output. This is not true with real-life users. Using Facebook as an example, I'm sure many of you are signed up to Facebook, but do not actually use Facebook that much. Some use the messenger chat only, some use groups very frequently, and some just browse the feed for a couple of minutes a day. The point is that the intensity of usage between users is not equal here, hence the variations on Metcalfe's law. Now, for the final method, which doesn't include any calculation, this method is obviously the easiest out of the three in this video. However, it only works for certain cryptos which have adequate data on SanBase. That is the disadvantage of this method. So for this, we will use SanBase. On SanBase, simply pick a crypto. If it has on-chain, then you are in luck. Click it and see if it has the network value drop down. If it does, great again. Now, click on network value and find NVT ratio. Usually there are two, and you can use either as they both give pretty similar values. What the NVT ratio tells you is the network value to transaction volume ratio. This is similar to a price to earnings ratio in traditional finance. If the NVT ratio is high, then the crypto is overvalued. If the ratio is low, then it is undervalued. But how do you know what is considered high and what is considered low? So, to do this, you need to look through the historical data and make up some idea yourself. Let's take AVE as an example. With AVE, we can see that when NVT is above 3,000, it is potentially overvalued and price seems to trend lower. When NVT is below 3,000, it is undervalued and price generally trends higher. Again, just want to make the point, this is not an exact science here, but you can get a rough idea of value. Whew, that's it guys. Thanks for watching the video, and if you did the calculation, well done. Well done on you, indeed. I wanted to get through this calculation and make it as simple as possible for you. So I hope it's, pretty self-explanatory, and yeah, feel free to look through it and look through the research paper and, let everyone know if there's anything we can improve. On this channel, there should be, the environment we're trying to create is an open environment where we're all sharing and we're all learning together to build a more fundamental analysis framework for crypto. I personally, I've watched so many different crypto videos, and everything is day trading, technical charting, and there just isn't enough fundamental based analysis for a long-term investor like me. So that's the whole point of this channel. And yeah, if you like the video, hit the like button and subscribe. I make videos like this every week where I do deep research on cryptos and I share that research with you so we can make better long-term investments. By the way, here is a list of upcoming content on this channel. So that's it guys. Thank you very much for watching once again, and I'll see you next week.